her stock, this company had its shares plunge after earnings. They fell 22% in a day. It went off to around a 30% sell-off, and that was 2 days in a row. Now it's back to $41 per share. It's having a nice little bounce back. We're going to be talking about what went wrong with this earnings report. There was one part of the earnings call that really caused the sell-off. We'll be going over it. We also have some other companies, ones that are in my portfolio, large concentrated positions, like Intuit. This is one that reported yesterday and the stock is up 13%. We'll be going over what's causing such bullishness in this stock. Now, just today we had Salesforce report its earnings and it's down 4.5%. It immediately sold off. The bots and traders did not like this report. They came in shy on their revenue and their forecast. We'll be going over the Salesforce earnings report, the commentary, and the future of this company. And of course, we also have the highly anticipated Nvidia report. The numbers are out and traders don't know whether to sell this one or buy it. The stock is moving from 2% in the red to 3% in the green, to back in the red by 5%. We don't know what to do with it, but we're going to take a look at the numbers and see if we can figure it out. So we have a lot of earnings reports to go through. We'll be giving context and numbers to that. And we also have some news. Amazon just announced Alexa Plus, this new $20 a month subscription. It's for AI Alexa, but it's free for Amazon Prime members. Andy Jassy went on an interview and talked about it and what it does differently. We'll be looking at this in the advances that Amazon's making. And there's also a report that 1 billion people are watching podcasts on video. Not just listening on audio, but they're watching on video. And this is a long-term trend that I've seen play out with a preference for video. We'll be looking at the transition and how this impacts different companies like Amazon Prime Video, Netflix, YouTube, and Spotify. So we have a lot to get to in this episode. Let's go ahead and start off with the big news, the one that everybody's looking forward to, which is Nvidia. Now, before we jump into the report, I just want to do a little flashback, just a brief flashback into what I said about this company just a couple days ago in my predictions. We have the prediction video here, and I'll just play just a few seconds of it with my thoughts going into this Nvidia.
That's a pretty funny graphic right there. Orgasm. The way to get to the Discord is through outlier.com. As soon as you sign up for the Outlier, we'll shoot you a link to the Discord. Just make it super simple like that in the sign-up process.
Earnings. And I believe investors should lower their expectations. I think it's going to be more mundane than investors.
Do you see what we're doing here? We're doing Inception, big Inception. We're doing a reaction video of him doing a reaction video of himself. This is fun.
Expect. And I think the data proves this. I think it's going to be more mundane. I think investors should lower their expectations. Towards the end of this, I further clarify, right towards the end of the segment. Let's skip to here. So I expect a very strong report. I expect earnings per share beats, revenue beats, continued strong guidance, but I believe a lot of that is already priced into the stock. That was my thoughts going into this one. I thought that Nvidia is going to be a company that does fine. I think it's a great quality company. It's growing fast. It's in fact incredible, the speed of growth, but there's already so much priced into this company. So the reaction from the market should be rather mundane. Analysts have already caught up to the stock. Now, when we look at the report here, Nvidia sales grew 78% year over year. This growth is just staggering. It's incredible growth. What did Nvidia do? Did they beat on their earnings per share and revenue? Yes, they beat on their revenue by a substantial amount, well over $1 billion. They had 39.33 billion versus 38. They had earnings per share of 89 cents versus 84. A beat on the top and bottom line. They're even giving good forecasts. So everything across the board is fantastic for this company. When we look at some of the numbers here from Nvidia, they are staggeringly good. The record quarterly revenue of 39.3 billion is up 12% from Q3. Now, that's from Q3. So sequentially, revenue's up 12%. 12% is faster revenue growth than most companies grow in a year. And Nvidia just did that in 90 days. In a year, they grew 78%. Record quarterly data center revenue, that's the biggest part of the company, that grew 16% from Q3, up 93% from a year ago. Nvidia is a data center company. The commentary from Jensen is obviously super bullish. Demand for Blackwell is amazing as reasoning AI adds another scaling law. Increasing compute for training makes models smarter, and increasing compute for long thinking makes the answers smarter. AI is advancing at light speed as agentic AI and physical AI set the stage for the next wave of AI to revolutionize the largest industries. So they're looking at this grandiose picture of AI revolutionizing everything. From a quick glance at NVIDIA's report, it's almost impossible to find any faults from the guidance to the recent quarter, the performance, the commentary from the CEO. Everything looks good top to bottom. If you're an NVIDIA investor, you're not going to be dissuaded from the stock because of this report. But
so far, I really like this channel. I like that he's being very analytical. There's no emotionalness in this at all. He's just talking data, talking the reports out there. I think this is great so far.
Also illustrates the power of expectations in the market. That as good as these earnings are, they were expected by investors. The stock is flat, trading down slightly now. It might be up after the call. Maybe there's some comments that spur a little bit of excitement. But overall, you see the issue here. For a stretch of time, NVIDIA was posting earnings that were surpassing investors' even wildest expectations. And that time period of surpassing those wild expectations seems to be over. The stock is now more fairly valued. It's a company that is now meeting investors' expectations where they are, not outperforming them. NVIDIA stock price today is now the same price it was back in June of 2024. So it's been some time.
That's what I was just saying earlier before we started the video here, that the price for Nvidia has been sideways for a long time. But was it, yeah, June? I didn't even see it back here at June. I just saw it back here at August. So we go that far back. This is what a stage 3 topping pattern looks like right here, where nobody can decide if they want to buy it or if they want to sell it, and you got people on both sides. Hey, you know what? I saw this post from Ryan. Started reading another one of your book recommendations, New Trader, Rich Trader. Ryan, you're gonna love this. If you actually go over to my YouTube channel, I have a video. Let me scroll to it real quick. I have 2,000 videos on here, by the way. I am probably the most prolific YouTube creator of all time in our space. I'll put it that way. But I have this video. It came out in December, where this one. We actually talked with Steve Burns, the author of New Trader, Rich Trader. And Steve is such a really cool guy. Definitely worth your time to go watch that video. From New Trader to Rich Trader, Story of Success. But yeah, Steve Burns is the author of that. Definitely worth your time.
Trading around this same range. With the expectations already baked into this company, I see more natural organic compounding like most other stocks. Overall, a strong report for a fantastic company. Now let's go ahead and move on to Salesforce. Now, when I jump into Salesforce, we see that it's down after hours. That's never a fun thing. It's down $10, minus 3.4%. It's actually coming back a bit. After Salesforce reported its earnings, it was immediately down 6%. So it's working its way back to the green. And after looking at this report, I would not be shocked. In fact, I wouldn't be surprised at all if Salesforce is in the green tomorrow. Salesforce had really bad headlines. We look at it here. Salesforce misses on revenue, issues disappointing guidance. Not good. And it's true. The revenue came in shy. They had $2.78 of earnings compared to $2.61, so they beat on their earnings per share. Unfortunately, they came in just shy on revenue, $9.99 billion compared to $10.04. Now, that's a small miss on revenue, but it is a miss. Revenue increased 7.6% from a year ago in the quarter ending in January. That is the issue with Salesforce, is the revenue growth is slowing down. And they reiterated that the revenue growth is slowing down by their guidance. The market's trying to work out the fact that Salesforce is now a slower growing company, no longer growing in the teens, but growing in the high single digits. The 7 to 9% growth is okay, but it's still more of a mature feeling company. When we look at this in the actual report, we see a lot more highlights that I think give context. They had $900 million in data cloud and AI annual recurring revenue. That's up 120%. So the segment of their business involving AI is growing rapidly. Since October, they closed 5,000 Agentforce deals, including more than 3,000 paid. So they're closing thousands of Agentforce deals, the majority of them being paid. That is a major thing that investors wanted to look at. Are they able to push out this new product? Are they able to charge money for it? Does it have a high retention rate? Do their customers like it? These are going to be questions that they'll answer in the call, but this is, I think, one of the biggest deals for the company. They also highlight on here that help.salesforce.com, Agentforce has handled 380,000 conversations, achieving an 84% resolution rate, with only 2% of requests requiring human escalation. These numbers, a lot of people, frankly, just don't believe. They think that Mark Benioff is making it up. Because if you can resolve 84% of customer inquiries with a bot, the industry norm is that bots in most cases make people upset and they need to talk to humans. So if this is correct, this is a massive opportunity.
How many times have you talked to like, put it in the chat? I want to see a number. How many times have you talked to a bot and you were like, oh yeah, I love talking to this bot. This is great. This has definitely helped me out so much. I mean, ChatGPT is pretty great, but I'll give you a bot story that I had to deal with one time. We were going through McDonald's. Yes, I still go through with McDonald's. I have kids, and we're going through the line at McDonald's, and not it was the drive-through line, and this notice came on the speaker, and it was like, this call, not call, but this order is being handled by AI, and I was like, okay, well, this should be fun. And so I was like, give me a Happy Meal and a Coke and whatever, right? And it was like, oh, you would like a apple pie and a double burger cheese mac. I don't do McDonald's. I don't know. You want a Big Mac and an apple pie? And I was like, no. I want a Happy Meal and a Coke. And it was like, you want a double quarter pounder with cheese, no fries. And I'm like, no, freaking no. And I just drove away. I was like, this is useless. If this is the future, this is the worst I've ever seen future. So yeah, Shane says 0. Absolutely. The Decadent Wolf has had 4 good instances. That's good. Craig says 0. Salty Dog says 0. Yeah, these bots, I don't know. I can't imagine that they're really handling 84% resolution rate so far.
opportunity for Salesforce. And the story needs to be painted here that this can really push Salesforce in the future. Now, this fourth quarter, the downside was the revenue growth, and that's the same with the guidance. They only grew revenue by 8%, 9% on a constant currency basis, and they're guiding for 7 to 8% growth next quarter. So investors are now pricing in that this is a bit more mature, slower growing of a company. I invested in Salesforce knowing that it's a more mature company with a slower top line growth rate, but they're expanding margins rapidly. The story of Salesforce is the story of a long-term secular grower that can grow faster than the speed of inflation, but also rapidly increase margins, pushing out high amounts of profits and free cash flow. For example, in operating cash flow, they had $13.1 billion in 2024. That's up 28% year over year. Free cash flow of $12.4 billion, up 31% year over year. So they're growing free cash flow rapidly. In their consolidated statement of cash flows, we see Salesforce having net cash provided by operating activities of 3.
Okay, clearly he's an investor. And I mean, Salesforce is getting just like monkey hammered lately. I got to do it. Salesforce has been monkey hammered lately. I had to do it. So, like, here's the stance that I take. When someone comes to the table and they're talking about how great the stock, let me rephrase it, how great the company is, how great these revenues are, how they're getting 84% success rate with their bots, right? All of these different stories can be fantastic, can be absolutely fantastic. But that doesn't mean that the stock is fantastic. It could be a fantastic company and a terrible stock. It can be a terrible stock that is going up, or it can be a terrible stock that's going down. But there's the stock and the company don't have to align. No way they don't have to align. And I think Salesforce is a perfect example of that, right? From these highs made just a couple of weeks ago, it's down 16-ish%. It's clearly in a bearish trend right now. It's going to be another 3% this morning after earnings. But if you're an investor, give me a break. Give me a freaking break. Just add the 150-day exponential moving average to your chart and tell me how much better your life is, right? Let's go close to close. One close over the 50 moving average to one close under the 50 moving average. You made 22%. It took you 75 days, and that's fine. Right? Doesn't matter. The point is that you had a plan, you got in, you got out. There's times like this right here. It's a great example of how you might make a buck and you might lose a buck over and over. But when the trend goes, you're there. You're right there with it, and you can be that champion of that company. Imagine here. Let's throw a sports analogy here, right? I don't watch sports. I know of the Dallas Cowboys. I haven't watched a Dallas Cowboys game since I was 8. Troy Aikman and Emmitt Smith and Deion Sanders and Michael Irvin are the only Dallas Cowboys I know. That gives you perspective of how long it's been since I've watched Dallas Cowboys. Imagine that you could tune in when they are winning in their seasons, right? Imagine you could tune in when their season is working and it's awesome. And then you could tune out and skip all the games where they are losing, and the market tells you when that's happening. And every once in a while you come in and they got a tie game. But then every once in a while you come in because you get an alert that says, hey, the Cowboys are going to, the Cowboys look like they're on a winning streak right now. And then boom, you can watch them all season long. They go and they don't quite win the Super Bowl, but you got out. You stopped watching them before they got to the Super Bowl. So you didn't have to watch them lose. Like, that's a decent sports analogy for how you can trade this long term. You can trade any stock long term, because at the end of the day, if you're holding a stock when it's going down because you love the story of it, I got news for you. Only price pays. The only time you're getting money in your account is when the price is going up. So if the price is going down, you're losing money. And you don't have to. You just don't have to. Deus Ex Machina says, I like this analogy. Dr. J must have said something cool. I have no idea. Why does anyone like the Dallas Cowboys? People should understand that OPP, and because of the sell on Dallas 28 years ago. Me? What is that, Chris? Chris on Blowhorn. Because only price pays. Good morning. Well said, Dr. J. I would be shorting the Cowboys for the last decade plus. Yeah, exactly. Exactly. You can tune in when your team is winning, and you can get out and stop watching when they stop winning, right? Another great example, I used to watch Formula One. I loved Formula One. And I was always the guy who was rooting for McLaren when Mercedes was dominating everything. I was the guy like, come on, McLaren, you can do it. And they're halfway up the field. And then they get those Honda engines, if you remember a few years ago. And like it just like ruined them. And so I was the guy who was rooting for the team that just couldn't make it happen. They were fighting for the back, where Red Bull and Mercedes were just like taking the championships every year with ease. That's like trading. That's like trading. You can root for the guys that are going down, or you can root for the guys that are going up, and you can be a fair weather trader all day, every day. Mark. This is our resident math nerd. Like I say, I like crepes. I don't get it.
$97 billion. They had capital expenditures of only $154 million. That nets out to around $3.8 billion in free cash flow. Now, we look at $3.8 billion and we put that in context. That cash flow is well above where it was 4 quarters ago. We go back 1, 2, 3, 4. It was 3.26. So this quarter, year over year, they went from 3.26 to 3.8. Huge upgrade in cash flow once again. And even now, just looking at the stock over the past couple of minutes, it went from minus 3% to minus 1.5%. When we look at the valuation of Salesforce, it's noted that it's a slower growing company, but these are surprisingly high yields for a company of this quality. Salesforce still has massive distribution, huge customer base. They're implementing AI, they're pushing up margins, and the company trades at a 27 PE, a 4% free cash flow yield. That's just not an outrageously expensive price for a company like this. So this wasn't an amazing report, but I think it was good enough to support the stock where it is. Now, finally, we get to a company that did have an incredible report. It's one of my largest holdings in my portfolio, which is Intuit. Now, my portfolio currently, Intuit's a $70,000 position.
What is Intuit? It's INUT, right? INUT? No. INTU? There it is. Oh. Well, I did have a great earnings report, but I can't look. But it did come right up. I'm sorry. I should say it came right down to that order block. I'm not saying the order block caused this. Clearly, earnings caused this. But here's what we need to know. We need to look for gap and go versus a gap and crap on 3 candles. Let's review what a gap and go looks like. A Palantir. Now, disregard this side. This is a gap and go where it pops up and it just goes. Now, Alex Karp decided to sell. Everybody else decided to sell after him. That's what a gap and go looks like, where it gaps up and it keeps on going. And then we can look at Celsius, which is a gap and crap, where it bounces up on earnings and then gets like monkey hammered right back down. So if we go to Intuit, this is one that, first off, how obvious of a downtrend is this? This is one of the most obvious down. Like, let me give you some perspective here. I blew up my account one time. The second time I blew up my account because I was trading gold when I saw someone on the internet saying how gold was the greatest buy of all time. So I bought everything I possibly could with gold, but I never looked at the chart. And had I looked at the chart, I would have seen something like this. And not being aware of what the stock was doing is what caused me to blow, not the stock, but gold itself and all the related stocks and ETFs that I bought around it. Not seeing the chart for what it was, not being objective, not being realistic, and seeing that it was in a very obvious downtrend is what caused me to lose my account for the second time. Now, I don't want you to do that. Now, and the way that you can avoid that as of right now is I need to etch this in your brain, like between all those creases you got up there. I need you to etch this in your brain permanently. When the 10 is under the 20, and prices under the 50, that is a bearish trend. And look at this beautiful. This is the kind of bearish trend a short trader would want to see. They could put this on and go to sleep and not touch it for a month later. This is gorgeous. This is like the Cindy Crawford of downtrends right here. This is like the throw some beautiful women in the chat. This is like the Margot Robbie of downtrends. This is like my wife, I'll put it that way. This is like my wife of downtrends. And because of that, if you are investing or holding because you're a long-term investor, Like it is just the worst, right? Bob, it was nice knowing you. It was nice knowing you, Bob. Sorry, dude. We are in an echo chamber here. This is the most beautiful trend, as if it were Nancy Pelosi. So yeah, with that being said, if you are a holder of Intuit, just give it a couple days, find out if it's going to gap or if it's going to crap. And if it does gap and go or gap and crap, you need to decide which direction you're going to go along with it, right? You make that choice. So real quick, let me introduce myself. Clearly Bob didn't know who I was, but you guys might. Let me find my slide here. Hang on. I can't tell you who I am. I'm just a random guy on the internet. My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, Bob. Those are the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. Do you like that new slide? Outliers like us save time, make money, and start winning with less risk together as a team. Hey, real quick, subscribe if you haven't already. Now let's rank this video. Where are we going to put this one today? Where are we going to put this one? I will give him bonus points today, and I want you to give him a bonus point as well in your ranking because let me find, because dude has a squat rack. It looks like in his bedroom. I approve. Meathead approved. So he gets a bonus point from me on that. Let me take a screenshot of this while you put your thoughts in the chat. He gets a bonus point for me on that. So where are we going to rank Joseph Carlson? Got an 8, a 6, a C. Am I an employee of this company, Outlier? No, my friend. I am the chief marketing officer and a partner, equity owner in the company. So yeah, I guess you could say I'm an employee. And yeah, I am based beyond belief for Outlier. Joe Love, 4 + 1 bonus point because thick thighs save lives. Okay, I'll go with that. I'll put this in the. I would have given him a decent. No, I know you're doing. I know one of you right now is typing a 7, and I need to make it abundantly clear. Nobody is getting a 7. Nobody gets a 7. So I'm gonna put that at a 6. Oh man, we got another girl in the chat. Y'all be cool. Hey Sarah, good morning. Salty Dog with a 5.7. I like that. That'll work. All right, so that's where we're going to drop that there. But let me ask you a question real quick. I want to ask you a question. What do you think? I want you to go over to my YouTube page, and this is something we're going to start doing in the morning shows. What do you think? Do you think that most traders lose money because they're too impatient? I want you to go and vote. Just go over to my YouTube channel, click the posts, and I want you to click, and we're going to review the results of this after a few minutes, right? Do you think that most traders lose money because they're too impatient? So would you click, I want to make money fast, or slow and steady wins the race? I'm actually really curious to hear what you have to say about that. And I'm also curious, have you got your 64% off the Outlier annual plan yet? That's just 82 cents a day. And if you're on a monthly trial, just let us know, shoot us an email, and we can upgrade you with no problem whatsoever. But now it's time for you to put your stocks in the chat. Let's hear it. Steve says, too many fun, dumb mentals for me. I agree so much. Put your stocks in the chat. Let's take a look at them. Please watch Raider Trader and review his videos. Okay, here's what we're going to do. I'm going to go over to here, Raider Trader. So this is my dummy account that I use for, hang on. Let's see. I don't do Forex. If I see somebody who talks Forex, I don't even look at them. Okay, here, I'll add him to my list. So yeah, this is my dummy account that the only thing I do is put on stock trader videos. So I'll be glad to. Thanks, man. I appreciate that. Jay, good to see you. The market breadth is changing my life. Oh, awesome. Okay, let's look at your stock picks, and we'll throw them in Outlier first, and then we'll take a look at them on the charts too. JG says IBF. What happened here? Did I type that wrong? IBF. Okay. No, we don't cover IBF. We cover 2,500 stocks in Outlier, but IBF is not one of them. we do plan to add more and more and more. Why IBF? I don't have IBF. That must be something that's not US based. Sorry about that, dude. I can't really see it. NC got an outlier buy signal today. Okay, we'll go look at that one. NC. All right, Steve wants to take a look at NC here with the outlier buy signal today. Let's throw it in on the 3-month chart. So here's a couple things I want to notice. First off, and I'm taking more and more time to look at this constituent heat map, because this value right here is the fear and greed index for each individual stock. And this is the fear and greed index for that particular sector. So this one came down in the greediness and is now starting to come back up. Looks like we can do 10, 20, 50 right here in outlier. So it's got its 10, 20, 50 popped up, which is what we want to see. But the heat map is showing on the sector that the sector is getting more fearful, where this one stock is getting more greedy. That divergence there makes me a little bit nervous. Let's double check and see if there are any order blocks on NC. Oh, there's actually one right here. At some point, obviously, I traded this one too. Then I removed my notes. There is an order block that it's fighting with. And so this is what's important about order blocks. You can see the first time it's come up into this, it wicked into it, down, wicked up into it, past it, down, wicked up into it again, down. This is one that really might be struggling with this area right here. There are clearly big orders that want to get filled once it gets up in there. So for NC in particular, I wouldn't trade it, and I wouldn't trade it because of this order block here. But I mean, we got that buy signal. It's looking a little bit more greedy, but you do have a couple things going against it. Like I said, the sector is looking more fearful, and then the market itself right now is also in a bearish trend. So that makes it a little bit hard to justify to me. Jonathan wants to look at SEVA, C-E-V-A, C-E-V-A. Okay, so SEVA, we've got this order block right here. I don't know if it's going to cross through that. In fact, how far back does this order block go? That goes back a while. Oh my gosh. This order block goes back all the way to 2022. Now, one thing that I have found is the further back they go, the stronger they are. It hasn't ever come up to that point in 3 years. It got close, but it hasn't ever come up to this point in 3 years. Let's look at it in outlier real quick, though. So everything right now, I think I typed that wrong again. I'm sorry. /CEVA. No, we don't cover SEVA. That's okay. We are increasing the number of stocks we have inside of Outlier soon. So my best take on this is you've got a big overhead order block right here, and it might be difficult to get through that one. But thanks for that, Jonathan. I really appreciate you, my bud. JG wants to look at BPF or PBF, Peanut Butter Factory, right? It's the Peanut Butter Factory. Oh wait, it's PBF Energy. It's Peanut Butter Factory Energy. Okay, so I hope that you're shorting this one. 10, 20, 50, all pointing down. The market's pointing down. Market breadth is pointing down. Everything that I see is pointing down right now. And let's look at PBF, Peanut Butter Factory. We do cover the Peanut Butter Factory. All right, so we got that short signal. Let's go over to it real quick. And this is more what I'm looking for, right? You've got the stock getting more fearful. You've got the sector getting more fearful. You've got the sell signal coming through. This is a beautiful short to me. This Peanut Butter Factory, JG, is a really beautiful, beautiful short to me. So let it run, my dude. Let it run. But also have that trading plan in place. Bob, good to see you. Hey, Bob, I want you to know, I really appreciate you taking the time to chat on the Discord yesterday about those options. This afternoon in our member highlight, I wanted to discuss that because we had a great example of why liquidity really matters. Bob, you are a rock star for that. AXON. Okay, so AXON. And something happened before earnings, right? Had a big sell-off before earnings, and then earnings jumped up, and it looks like it might be in a gap and crap situation. The way that I determine a gap and crap is look at the bottom of the first day's candle. If it breaks down through the bottom of the first day's candle, that's not so bullish. That's not so bullish at all. In fact, I would consider that very bearish. Let's look at Exxon real quick. AXON over here. an outlier. And let's zoom into the 3-month chart. And we can see here, we did get the sell signal. The sector is getting right here. The sector is getting more fearful. The greed is being evaporated from Exxon. Exxon looks like a great short to me. Just know, of course, where that risk is for you. Thanks, Bob. Really appreciate you. Luca Tubo wants to look at Asmil. Asmil? The New York registry share of something. All right, so you got a bullish trend going on, 10, 20, 50, all pointing north. It's not like a beautiful giant trend like you want to see, but it is absolutely mathematically a bullish trend. Let's go to Asmil in here, ASML. Chip stocks under pressure of reports of possible export controls. Let's go to the 3-month chart. Intel, AMD, and Asmil stocks fall. So this is a chip stock. Why does it say Asmil holding? I don't know. Whatever. Okay, let's look. So the sector, the tech sector, getting more fearful. This particular stock, though, with that sell signal in place, the fear has not really started to evaporate from it yet. So you've got a bit of a divergence here where the fear has not really come into it, where the fear in the sector definitely has. We do have the sell signal. So this is one to me that I'm really not interested in me personally with that one. But I will say, who is that? Luca Tubo. Just know your risk, right? If you're wrong, it's okay to be wrong. In fact, let's go to that slide real quick. I really want you guys to just like embody this. There's no shame in losing money on a stock. No shame at all. But to hold on to a loss and let it get even bigger and bigger, or even worse, to buy more, is amateurish and self-destructive. And Luca Tubo, I'm not saying that you're amateurish or self-destructive. In fact, you're an outlier. You know. Just make sure you control that risk, dude. Thanks for that, Luca Tubo. Oh, he's short. Okay. I'm not quite there on the short yet. Your 10-20-50 is not quite there. It's more of a sideways trend. I mean, it's under the 10-20, so give it another day or two and it might go down. That definitely changes perspective here. You got a short signal here. So you're almost there. If I had to rank this out of 10, I'd rank this, I would rank it as 7 because it hasn't quite got the trend behind it yet. But of course, just know where that risk is at. Okay, let's look at Tesla. Let's look at Tesla. We talk about Tesla a lot. Tesla is absolutely in a stage 4 downtrend. It's absolutely in a stage 4 downtrend. But I'll tell you one thing. There are some stocks that I do not short. Tesla is one I do not short. The reason being is that it is so volatile, and you and I both know this. It's so volatile that it's like the one day you put on a short is the day it's going to jump up $27 or like $50 or something, right? But this is one that I would definitely not be buying it right now personally. Travis, it doesn't look really strong to me at all. And it certainly looks like it's coming down into the denial and panic phase of this. But if you're short this could be making great money for you here. Great money for you here. Let's go back to see what you voted real quick. I'd really like to see that. So I asked you guys to vote over on my channel to see, what was the question? The question was, do you think most traders lose money simply because they're too impatient? And 43% of y'all said, I want to make money fast. And 57% of you says slow and steady wins the race. I actually fall into the I want to make money fast category. Why not? Who doesn't? Listen, I heard this the other day on a video and I thought it was so true. Do you want to get rich quick or do you want to get rich slow? If you made $1 million and it took you 1 year, you definitely would feel rich. But if you made $1 million and it took you 40 years, you wouldn't feel very rich. So in my opinion, I want to make money as fast as I possibly can because then I can enjoy it for longer versus trudging and slogging my way to make that same $1 million over 40 years. If I can make it in 1, that'd be good. But of course, always know where that risk is at. Always know where that risk is at. So, oh yeah, there it is. Let's see how you voted. Be sure you come back tomorrow where outliers like us, this is a new slide and I like it a lot, where outliers like us save time, make money, and start winning with less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you click one of those, and I also recommend you have a fantastic day. We'll talk soon.